there's always going to be bid for memes and things like that, but I don't think it's going to be like that barbell portfolio in 2025 like it was in 2024. I think to the point you mentioned, like I think there will be a bid to a lot of these more fundamental type of coins, whether or not that's OG DeFi, whether or not that's like more new school type DeFi.
We get to kind of financialize every new cool thing that comes along, and so you always get to be at the forefront of that. Some people call that late stage capitalism. I call it the best industry in the world.
The deeper you are in the space, the chances are the better off you'll be on the liquid side, just because you'll catch narratives early, right? If you're pretty passive, then I think this is a much easier pitch because you can actually get great access without having to put in the time that someone who would need to do this full time.
Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice. Hi everyone, and welcome to another episode of the Hivemind podcast. The goal of the podcast is to provide an inside look into what we like to call the Delphi Hivemind, bringing together some of our smartest minds from each of the divisions to share insights, alpha, and shitposts. Today with us, we have the usual cast minus Duncan, who is indisposed, I believe. So it's Ceteris Paribus, our head of institutional research, Jan Lieberman, managing partner of Delphi Ventures, and usual guest now, Jason, 3x liquidated on Twitter, who is you head of markets at Delphi Research? What's your...
Yeah, I think that's roughly the title.
Nice. And obviously I'm Jose Macedo. I lead our protocol R&D arm Delphi Labs, and split my time between that and Ventures. So another good week for crypto. Well, as we're recording, there's just been a bit of a dump. I think Bitcoin's trading around. So we're recording this on Wednesday, the 18th of December. I think Bitcoin's trading around 103K last I checked, and alts have taken a bit of a dive. Maybe to start with, how's everyone feeling about markets here?
I think that's a bit harsh to call this a dump. But yeah, I don't know. Maybe we start with Jason on the markets.
Yeah, let's do it.
I think I'm still very bullish markets. I think probably people maybe de-risking into the FOMC later today, because those are generally pretty volatile events, I guess, like short-term trading events. But I don't know, I'm just still bullish. Like I don't think anything's really changed in the macro outlook of things. I don't think anything's really changed in my outlook for crypto markets. I think we probably, generally just grind higher through the end of the year. So I think when I was looking last night, I think we had like wiped a couple billion off Bitcoin OI, a couple more off alts and global OI, maybe even more this morning. Funding's pretty low. I don't know. I just think things look, pretty good generally. I think we maybe got a little bit ahead of our skis with the run up to 108. We added a couple billion. So like we've pretty much wiped out all of the OI we've added this week into that run up. So I don't know, quite bullish still. I guess like if you're like super levered up, this move is probably uncomfortable, right? Like, I mean, I guess if you're uncomfortable on a 2% or 3% move in Bitcoin, that might be more of a commentary on your positioning than the market
Still
itself.
Issue.
Yeah.
You might have a problem.
Yeah, right. Like if you're getting close to liquidation when Bitcoin's at 104 right now, or 104.5 when we were at 108 yesterday, like that's a you problem. But yeah, generally I think the market looks good. Like I think we just continue to grind higher. I think you probably get Saylor back in the books in the coming weeks. You have inauguration midway through January, which I'm not exactly sure how that's going to play out. It might be kind of like the Bitcoin ETFs when those were like finally approved in January of last year. It was roughly around the same date as like maybe January 11th versus inauguration on January 20th, where you get like a run up into that and then maybe like a week or two dump after it, and then kind of a return to like, oh wait, this is actually really bullish, type of thing. You could see end of year profit taking, but like I said, I'm quite bullish on Bitcoin and crypto generally. I think the outlook's fairly constructive.
Yeah, I think on that point, inauguration thing, I think a lot of people have that thesis.
Yeah.
I also think that was the same thesis everybody had for the election, where it was like you'll get this candle on the election and then it'll kind of sell off for a bit. Yeah, for me personally, I don't know. I'm kind of been in disbelief with this market since the election. I don't really have strong takes either way. I don't know. It's like we talked about this in our group chat in 2021 when the Fed signaled they were going to start raising interest rates. My opinion, I looked at that and I was like, okay, well, it can't be that easy. It can't be like they're just going to start increasing interest rates and they're just going to do it over a year and asset prices are going to puke, because it was like too obvious of an outcome, right? It was too textbook, like too markets are forward looking and everything, right? But then that's exactly what happened. Like the obvious case kind of just happened pretty systematically. Obviously in crypto you had more isolated events, but in like trad markets it was kind of just a steady grind down basically every day for like a year, right? And now I kind of feel like it's the opposite in a sense. Like, yeah, there's some dumb stuff going on, but it doesn't feel, it doesn't feel too insane yet still, which I guess sounds weird considering like Farcoin's at a bill today or close to that. But I mean, hot air rises, so that kind of makes sense. I don't know. How do other people feel about the market?
Yeah, I mean, I think the consensus was there's like or going into December, there'd be a sell off in December, and then you get like Christmas rally in equities, and then inauguration would be a sell the news. I think it's like hard to make those or hard to stick to those assumptions because it's also deterministic, right? Like there needs to be a big rally for there to be a sell the news. So as all of those things shift, it becomes, what you kind of think is going to happen also shifts. So why some of this stuff would play out. So on the, you have Sailor that's been buying since I guess like late October, basically every week. And so, the concern is what happens in Jan 1 because there's this blackout period.
What is the blackout period? He can't buy.
Yeah, so there's a lot of like they're basically like around earnings announcements. There's a period where you can't really, there's no activity that can kind of take place, and so the question it's usually related to selling stock, and he's been raising through convertible debt. So there's a lot of kind of confusion around exactly how that plays out, the length of the period, and what that means for markets. Whether he will raise. There's also, you don't know what he's going to do in terms of how he raises money and deploys it, right? He could, in theory, raise it all ahead of time and then continue to deploy it throughout that period. The blackout more so relates to the capital raising process, not the deployment side. So I think that's also a driver of weakness. It doesn't. I think you probably end up getting a very strong Q1 and probably first half of Q2, just broadly in kind of equities and in crypto as well, where all the kind of euphoria around the policies is factored in the markets, and then naturally, I think certain things, it won't all play out, right? Some of these policies take time to kind of take effect, and so you don't really realize the negatives until later on. So I don't think the inauguration ends up being that much of a sell the news event. He's continuously kind of talked about this the reserve, and so I it increases my chances of it happening very quickly, right? Because he obviously doesn't want that to be a stain immediately, and he's got the House and Congress, even though he doesn't necessarily need them to even just get it started. So, right. So I guess going back to the blackout period, the concern is if you don't have sailor buying, what happens to Bitcoin? What happens to the rest of the market? Do you get alt season? That's one kind of idea, or do you get like a broader pullback? And I think that's kind of the two paths this takes. I think the least likely is like a strong Bitcoin rally in Jan if he can't deploy. Um, but if he somehow raises and chooses to deploy gradually over time, then that's certainly different. It seems like he's taken his foot off the gas a little bit. I mean, you had the massive ETF inflow yesterday while BTC was down, which was pretty unusual to see. And then if you kind of Jason and I were chatting. If you look at kind of that relative to the perps premium on like Binance, for example, which has gone from premium to flat, there could be an argument that you're having ETF flows continue while traders are kind of de-risking a little bit, and so that's how you'd have that environment where ETFs still have inflow because that's where the buying happens, and then the APs are participating, and the selling happens elsewhere. But my base case is we're going to get an alt season in Q1. I think there's going to be funds that are deploying. I think new money comes in. If you think about the period, like new money comes in monthly, quarterly, and annually, and in an increasing fashion, right? You're getting your largest amounts usually at the beginning of the year, and so I think you'll have funds deploying into alts to start off Q1, and then the counter is that people who are holding will likely sell, like retail will likely sell in Q1 if they're up big because you're kicking back you're deferring tax liability for another year, whereas you usually have funds sell in December, which I think we saw a lot of in the first half of December. A lot of funds sold because they need to kind of crystallize carry and then also sell losers to lock in some tax loss harvesting. And so I think that's the kind of dichotomy. I don't know that there's going to be that much retail selling in Q1 that it's going to be a monster kind of dampening effect, have a monster dampening effect on markets. I still think we kick off the year and alts do well.
Yeah. Do you guys think we can get above like 150 without strategic reserve?
Nah.
Yeah.
Not soon, maybe eventually, but I think the difficulty is that part of the current price already factors in the effective one.
Yeah. It seems
What's
like
the latest? Oh, sorry. Go ahead, Setters.
No, I was just gonna say, like, this is the one thing where I'm not as on board with some of these bullish predictions of like 180, 200 plus next year, because I think if you don't get the reserve, that like takes a lot of money to move. Like Bitcoin's over 2 trillion now, right? Like that's a lot of money to move it to those kind of numbers. And if it's just like Sailor and then obviously the average person is whatever increasing once you get the RA starting to like incorporate it and being able to pitch it, you'll get like that will help as well. But it's still just a lot. It's just like a lot of money. And so I do actually agree with the whole like alt season Q1 thing. Just because Bitcoin has run so much. This is with the caveat that you do get like the surprise strategic reserve starts like right away. And then at that point, all bets are kind of off.
What's the latest on the strategic reserve? Has anyone been like catching up? Because some people seem to say it's like impossible, not going to happen, and then others seem pretty confident that it can happen. Does anyone have some like good research takes on this?
I definitely don't have like an alpha take on this. I was listening to Nick Carter's interview yesterday, and he seems pretty confident that it won't happen, at least not in the short term. Which I think like that's probably the biggest risk for Bitcoin is it like doesn't happen and it's like announced that it doesn't happen. Like if it doesn't happen, but like everybody's still speculating that it will happen and Trump keeps talking it up, right? Like it's not ideal, but like it doesn't take it off the table entirely. Whereas like if they come out and say, okay, wait, actually we're not doing this, that would be pretty bad. I think his reasoning was like it calls into question like the reserve status of the dollar, which I kind of see the argument, but I also like see like the opposite side to the argument. Like I see a world where it like kind of it's like, oh wait, like they're actually like thinking about how like because like that argument like till like I guess would take the view that like that the reserve status of the dollar and like the financial situation of the US isn't already being called into question, which like it obviously is. So I think like the perception of doing something like this probably is better than not, because it's kind of like the whole reason why like I think like Trump coming in and all of these, you know, conversations around the US financial situation and how they are trying to tackle it through various ways with like, you know, Department of Government Efficiency like Doge, different things like that. I think like the market, like to Setter's earlier point, is forward looking and kind of like gives the incoming administration credit for even, you know, discussing these things in like a viable way and trying to think of, you know, like ways to get the situation like more sustainable. So I think kind of like doing this like probably falls into that bucket more than not. So like, yeah, I don't have any super alpha here. It just seems very, very clear to me, at least. Like I remember back in Trump's first term in 2016, like he he would tweet about the stock market like all the time, like intraday. He would move markets with tweets, and it was like super frustrating at the time because I was like day trading equities and stuff pretty frequently, and like I would just like my positions would either just like get completely blown out by a Trump tweet or the reverse. They just like go straight up to the moon based on like what he said, like, oh, China trade war or something like that. So like the fact that he's like talking about it so much and seems to be quite like he seems to be like, you know, taking credit obviously for a lot of market related movement. So like I just don't see a world where he backs off easily from this. So I think it's more likely than not that we get progress towards the SBR in Q1 than not, which I think probably pushes Bitcoin towards that 150 area, which he like specifically pointed out. He's like, I want Bitcoin at 150 sooner rather than later. And like that's just not something I would like want to fade, because like he could get Bitcoin to 150 just via tweeting, not even with like an SBR.
Yeah, I think like the market impact of an SBR, particularly because of how many others would likely immediately follow suit, is very underappreciated.
Yeah. And just the front running, because I don't know how does it work? You like announce it and then there's like a whole process where you have to go buy it, or you'd
There's
announce
one
that you
swap,
bought it. Yeah,
one on-chain
Yeah.
swap.
What's the
because
opposite
at
of
the point where it's
FSHing?
like announced and it slowly gets priced in, like just seems like everyone in the world would want to front run that, right? I don't know. It just seems crazy to me that
Yeah, you have
this could even
the
happen.
you have the United States of America running a public twop.
Yeah,
It's hard to
exactly.
see. It's hard to see. Like, I don't know. Why would you sell? Right? It doesn't mean you don't get another big 50% drawdown at some point. But it's like, why would you sell during this twop? Right? I guess it's a good time to sell if like you really need the money. There's a lot of liquidity entering the market that you can sell into. But like,
Yeah.
yeah, I don't know. It's kind of crazy.
Yeah, I mean, I don't think
Um,
if you have that thing going, you need some cataclysmic event to get a 50% drawdown in BTC if that TWAP is running, because
yeah.
Yeah. All right. Do you want to move to the research side? You guys have just released your year ahead reports, which were awesome. By the way, I recommend everyone checks them out. Um, do we want to maybe touch on a few of the key takeaways there? Uh, there's a few of the interesting themes from both the markets and the info report and the gaming one, but I think markets and
Yeah.
info were pretty alpha packed.
Gaming, I mean, to be totally honest, is just not an area that I'm like very well versed in. But the gaming report is very well done if you are into gaming. You can get all the reports just like Quick Shell. I think it's like $1.99 or something. To like try them out. We did gaming a couple weeks ago. Last week we did markets and then infra. We did DeFi yesterday, and then we're finishing it off with like the hot sector. We're doing like a DPIN and DEAI one. So that'll be coming out Thursday, which is when this podcast I think will be coming out. So yeah, I think the markets and infra ones, like both of them were bullish on Solana, especially like the markets report, right? The infra one was more about, I guess like the section I wrote was about like high throughput chains and that being where the industry is kind of heading. And that kind of is an extension of Solana's success, right? So for me, it's like there just haven't been a lot of like use cases of app chains or just like, standard, I guess, like EVM chains, like you see with
Hyperliquid.
Hyperliquid's an app chain, yeah. Like perps chains, like perps is the one use case. Like every single time somebody shows me on like app chains are successful, it's always a perps DEX. It's
It's
like
also pretty much the one use case of crypto though, or like one of them, just a DEX, right?
right. But I mean, for the most part, people want to use like general purpose, shared state with like nice UX, high throughput, right? And so Solana that was their thesis, and over the past couple of years, that's been like proven very right. I think one thing people kind of neglect or ignore with Solana is sometimes they'll come up with this whole it's all meme coin trading stuff, and they'll comparisons to like BSC or Polygon or Phantom from last cycle when ETH got very congested and people moved there, but it really misses the point that like Solana got all this activity when the ETH gas prices were like 1 and 2. Why? Like it was very cheap, right? Like people didn't go to Solana just because it was cheap. They went for like a bunch of other reasons to do with like UX performance, all of that, right? So I really think that this is the direction the industry is heading in. And so you're seeing tons of like new chains launched in this direction. From the EVM side, you have obviously like Hyperliquid is aiming right today. They're this perps DEX. They're trying to transition to like this high throughput EVM chain. You have Monad. You have some of these rollups like Mega ETH, which is just going extreme on the hardware and like bandwidth requirements, just to create like a performant EVM. You have Ithaca, which is by the Paradigm guys. You have Rise, which is like this giga gas thing. Base keeps increasing their gas every day. So you just have like all these chains going there. Obviously, you have the move ones like Sui and Aptos too, right? So for me, it's just like a clear trend that this is where the industry wants to go to. At the same time, I still believe in the long run, the majority of activity is going to be like 3 to 5 chains. And like there's just going to be an absolute graveyard of a lot of these chains over the next few years, and you're also kind of seeing it with like the L2s now, where if you look at DEX volume on L2s, like 90% of it is Arbitrum and Base, right? And so you've seen kind of this like mass consolidation in the L2 world to Base and Arbitrum. And it's like just I guess like the standard theme we've been talking about over the past year with like token prices and stuff too is like consolidation just continues to kind of like drive everything here. And I definitely still believe that like it's power laws that are going to kind of take all this.
I agree that everything is going to be a high throughput chain, but I do still think there's definitely a world for app chains, and
So
I just think app chains will be high throughput, just like everything else will be.
So
and you mentioned Inisha in the report as well, which is
there's
a thesis.
Yeah, there's Inisha, and then there's also these ZKL ones. And so Inisha is going to be the first one coming next year, I'm assuming, pretty soon. And so they're building with like the thing with the app chains is that no one's really built with like app chains first. Like Cosmos kind of did, but not really. It wasn't like too coordinated. Inisha is coming with like this very coordinated launch.
I think the main thing with Cosmos is that the idea was that the thing you need to prioritize for app chains is giving them like security, right? Whereas I think what Inisha is prioritizing is UX. Is like how do you give app chains the UX you need to just be able to spin them up and have everything you need, wallets, stable coins, um, you know, like interoperability, easy access from other chains, like all this kind of thing, bridges.
Yeah.
Yeah.
So do you think Initial will be the first like actual well coordinated attempt at this, kind of like that we've seen? And then you also have some of these ZKL ones like Delta, Heil, Pod, who is probably the end game for like app chain modularity thesis.
Yeah. Would you agree though that the main reason for like shared state right now is just UX? Like there is actually very little sort of functional shared state, in terms of, I don't know, all the stuff that people used to say, like rehypothecation and like, all the things people used to say why composability was important have kind of not been proven out. Like most people just use Jupyter or they just use
Uh,
whatever app, or would you not agree with that?
I don't know if it's like just UX. There's also there's just like a lot more risk also when you're doing stuff with like two different state machines. Um, there's like latency between those, um, which could like I guess theoretically be solved with like some of these ZK ones. Um, it's just like you're not going to be able to create a better experience breaking everything up than having it all one place. If as long as it's like scalable, like you're always going to be a little bit worse off, even with like ZK. Like ZK can't speed up native execution or consensus or anything. It just proves it, right? So you're never going to like. There's this tweet I put in the report from Zaki. And he was saying like the black pill for ZK is if it's just used for transferring USDC between giant shared state machines, right? That's like a potential outcome where you get like three big like Solana type state machines that can handle all this activity, and then you don't really need ZK because you don't need to do like proving for all these different chains and like rolling them all up together, right?
I mean, I think the experience is definitely like less easy to make the experience good between two different state machines, but within a state machine, the experience should be able to be better than on a general purpose chain. So like the experience on Hyperliquid should be able to be better than the experience on Drift or whatever, right? But to get to Hyperliquid, Solana is always going to be harder. Um,
Yeah, the benefit of like launching your app on Solana though is you have all this liquidity, which is also why I think the SVM rollups will have struggled and like will struggle because since Solana is always scaling the L1 as an app developer, if you're going to build SVM, it's like why would I launch on a different?
But like I think Hyperliquid kind of shows that it is a UX issue. Like with Arbitrum, they pulled so much liquidity from Arbitrum, and I think most people didn't even know that they were moving from Arbitrum because the bridge worked so smoothly that they were literally going to like a semi-custodial service. Right? It's just that the bridge experiences right now are terrible. I don't know. I think like I guess my
Yeah,
thesis
it's
is
a
that a
perp
lot of
dex
the
though. It's
huh?
like it makes sense. A perp dex. All you need is one collateral asset, and like you don't need anything else, and so it makes sense for that. I'm interested to see how they do when they have like the Hyper EVM because it's like a separate component that needs to talk to the like native, the like Rust components.
Mhm.
Um, so then I guess we'll really see there. But yeah,
Fair. What about Jason? You guys did the markets report, and by the way, you've when Jason joined Delphi, you were known as the Bear King, right? You were
Yeah,
bearish,
Duncan actually
right?
gave me that nickname.
Who is now himself the Bear King. Um, yeah, you were known as the Bear King. You were bearish all through like 2022, pretty much until very close to the bottom, and then to your credit, you flipped bullish. So like the markets coverage has been for people who've been following it have done really well off it. So I'm curious, what do you see for 2025?
Yeah, so kind of like Cedrus was saying earlier, you know, last I guess at the end of last cycle, like it was relatively clear that like, the cycle was probably coming to an end. You saw like inflation ticking up, but the Fed was pretty slow to do anything about it. If you guys like remember, they were like talking about like transitory for like a while. And then eventually, like, I think most people probably realized that like it wasn't transitory before the Fed admitted it. So then like it wasn't like a question of like if they would raise rates, it would be like how much would they raise interest rates. And like I think that caught most people off guard. Like I didn't expect them to to go from 0 to 500 basis points in a year or whatever, which absolutely, you know, destroyed everything, right? Not just crypto. Like the banking the banking sector, the banking crisis in early 2023 was a direct result of how much and how quickly they moved interest rates up as a result of being behind the ball there, right? So I think like now you kind of get like the flip side of that, which is why like I'm just generally like bullish heading into 2025, even though like, you know, 2024 was pretty bullish as well, right? You had 2024 where you had like the early signs of like liquidity getting better, but like it's still like a relatively tight like monetary regime for the most part. The difference is we like had some pretty big crypto catalysts coming in, right? We had um Bitcoin ETFs, which were massive, right? Obviously 2024 was like the big dichotomy. It's like, okay, Bitcoin did really well, Sol and Sol memes did well, and then everything else kind of sucked for the most part. And I think a large part of that is obviously like Bitcoin had the ETFs, which were great, right? All of that demand, billions and billions of dollars. The, you know, number one performing ETF for the last like I don't know 10 or 20 years with like Bitcoin ETFs like IBIT, all of these things in terms of flows, all of that stuff was really great. Tens of billions of dollars demand. Bitcoin went up a lot from like I don't know, I think it was like 40-ish to 70 or so, and then consolidated for most of the year. I think like, you know, April to the election for the most part, and then kind of started legging up again. So you had Sol do really well, which then allowed everything within Sol to do well, right? Everybody who was in Sol did well. They got a 10x or whatever from the lows, like 20 to 200 or so. That money trickled down into Sol memes, NFTs for a little bit, projects like Jupiter, whatever, all these things, right? You had a good airdrop, a couple good airdrops with Jito. So you had like that pretty big wealth effect. So that's why you had like that like split in like performance. Bitcoin, Sol memes, and then everything in the middle kind of just not great. And now I think with interest rates, you know, starting to be cut in September, and I think we have maybe like 4 to 5 scheduled or like predicted rate cuts over the next 12 months, even more if you like extend that outlook to like 18 or 24 months. You have the FOMC today. Yeah, today's the 18th. Yeah, today. Which I think like the FOMC like Fed tracker tool or whatever has like a 99% chance of another 25 basis point rate cut today. So you have that coming in, plus a couple more in the next several months. You have a new regulatory regime coming in. So you go from like an actively hostile regime and administration that effectively tried to kill crypto with like the Operation Choke Point stuff last year and the year before, in addition to like the SEC just being really terrible and enforcing by litigation rather than goodwill enforcement and good faith discussions about like what's allowed and what's not. So when you have like these two things happening, it kind of like in my on top of this, you have like a bunch of global central banks moving from tightening to easing policy. So like you have like a pretty good storm of macro catalysts and like industry specific catalysts that are kind of coalescing all at like the same time, which I think generally bodes well for the industry. So like I think you like absent some you know catastrophic events or macro related things in the upcoming year, I think it generally is a very constructive outlook. Obviously there are some risk factors, and we do discuss some of these in more detail in the report at the bottom. I think it's like potential risks to the outlook is like the section. So if you just go there and click that or whatever, or listen to the podcast that we recorded based on the year ahead, we kind of discuss those. But yeah, I think the outlook's just generally good from a macro down to a more micro view. Interest rates coming down, so I think you can kind of like my general methodology is just like keep it simple, stupid. Like there's a ton of things you could get, you know, lost in the weeds with these types of macro outlooks, and I think it's just like, okay, like global liquidity is kind of moving towards easing. You have a bunch of central banks moving in that direction, so that's good. interest rates are coming down after being held at 4 to 5% for a while. That's good. You have ETFs, you know, that have been a like resounding success, which lends even more credibility to the industry, specifically Bitcoin. And now you see the ETH ETFs getting, I think it was like 12 or 15, maybe 18 days. I saw a tweet of consecutive inflows, which is fantastic, especially compared to when they launched several months ago, where they got zero flows or negative flows, which was pretty terrible. It was like a running joke for a while. And then you have the regulatory regime changing to one that like is, they're promising to be good, right? Like whether or not these campaign promises are kept is still up for debate. But if you look at the early, the early signs and signs of where they're going, the appointments they're making, the rhetoric coming out of the incoming administration, it seems like they are trying to make good on these campaign promises of regulating in a much more good faith way. So like you have all of these things. It's just very hard to be bearish at a high level, right? And like, what does that mean for like specific assets? Well, like,
Well, you actually talk about that a bit in the report, right? With the memes versus,
yeah,
because and you were very early to memes. You've done well on them, but in the report you talk about how the return to positivity and like TradFi coming in might mean, and it has meant, in fact, like a bid for utility assets and things they understand with cash flows, like the traditional DeFi stuff. Yeah, do you see that continue? Is that going to take the sales out of like the meme super cycle thesis? Maybe how do others?
yeah,
How do others
I think
feel about that?
to an extent, yeah, I think so. Like, I don't think, I don't think memes are going to go away by any means. Like, I think everybody in crypto loves memes. Like, I think like you just look at some of the things that have run in the last couple of weeks, like Fart Coin, right? Like 0 to $1 billion in the last couple of weeks. I know it's like an AI type narrative meme, but like there's always going to be bid for memes and things like that. I think the memes that are, I've called them mega memes at this point, the ones that have like tier one listings that, do billions of dollars of trading volume a day, have tons of liquidity. Like, I don't think these are going to go away. And I think they'll generally do well as crypto does well. But I don't think it's going to be like that barbell portfolio in 2025, like it was in 2024. I think to the point you mentioned, like, I think there will be a bid to a lot of these more fundamental type of coins, whether or not that's OG DeFi, whether or not that's like more new school type DeFi, whether or not it's things like Athena with like, I think I just got a tweet from a tweet notification pop up that said they have a partnership with like WorldFi Liberty now. So like there's,
so like that's an
onboarding
important point though,
asset.
because two of the two best performing DeFi tokens are Aave and Athena, and they're both also kind of memes because they're like Trump is like working with them and buying, like Barron's aping ENA on chain, right? And like, I don't know, I don't think this DeFi rally is going to be broad based. I don't think people are going to get eager to go ape like synthetics or I don't know, man. There's a bunch of
Don't
like
say
DeFi.
liquidity.
There's a
Jordan
liquidity actually looks, liquidity's kind of interesting, but like Maker, for instance, it's not like Maker's done great like recently, right?
Yeah, Maker
Which
just
is
feels like
is partly because of Athena too, right?
Yeah. Well, it's also just if you think about like where's the majority of fresh money coming from, it's likely funds, and so it's a lot easier for them to size into narratives they can rationalize both to themselves and to investors if things go south. And so I do think there's going to be some concentration in those winners, and I think like that's going to be good for hype. It'll be good for ENA, likely Aave as well, and then you have the kind of sprinkling of Trump endorsement indirectly, and it's you really see like this. Even though we're in a PVE environment, there is still this kind of PvP hot ball of money that goes around. You saw the wins kind of taken out of Sol for, I think, yes, Sol got hit in from every direction, right? You have the unlock issues, you have hype cannibalizing flow, you have pump fun kind of volumes getting cut in half because there's been a shift to kind of agentic memes, and so I think all of those have probably a good setup for Sol into Q1 as well. But it shows that, you know, if you're thinking about where to invest, like, it's not everything go up, and so if you're on the fun side, it's a lot easier to kind of rationalize those bets. And
I think the Sol weakness has like made perfect sense over the last little while. I still think that the agent sector, and like not necessarily the agents themselves, but
Maybe we can talk about that actually, because you guys had a good discussion in our internal company chat, like you and Jason, just about, and I think it really highlighted like the different trading styles that people have. Um, where obviously you were very maybe not very bullish, but pretty bullish. The AI agent meta, goat, virtuals, etc. And Jason was more, he's a dog coin or a animal coin maxi. And maybe you want to talk about that a bit, like why, I guess maybe why you see the AI agent meta as super interesting, and then why you haven't been convinced, Jason, from more, I guess, like technical reasons.
well, I think I kind of explained this a bit on the last pod, and a big reason was honestly not a good one. It's just that it's pretty obvious that a lot of money is going to go into this, and like the valuations are pretty low, and a lot of that has to do with everything being kind of like on chain, right? Um, the big winner so far have been these platforms and these frameworks. It hasn't really been individual agents themselves. Um, you know, you haven't really had an individual agent go to a crazy market cap, but you've had virtuals go from like 100 mil to 3 bill. You've had AI 16Z go from 0 to close to a bill. You've had some of these other ones, like I forget what they're called, like ARC or something, but you have a lot of these platform plays that actually have like fundamentals, and people are just wanting to, you're just going to see a lot of people launching agents from these, either whether it's like just to be, I don't know, KOL ship posters. There's some game frameworks that Virtuals has that you can kind of like work into video games and stuff. I think there's just going to be a ton of experimentation within this sector, and then where you look for that is like, what are people going to be using to experiment in this sector? And it's going to be the platforms that make it easiest to kind of do this, right? And the frameworks that make it easy to launch an agent, right? I don't think at the beginning, like when Goat came out, I was very bullish on Goat, just because it was like, I just could tell this was going to lead to something big, and it was the only way to kind of express that opinion at that time. But I think now I'm like I still own Goat. But I'm like definitely not as bullish on it. And I'm also just not as bullish as on trying to pick out like individual agents. Because I don't know, it's still hard to wrap your head around like why an agent itself should be worth a lot versus the platform is just such an easier kind of like fundamental story.
Yeah, I think it's similar to the L1 trades back in the day, where you're oftentimes better off trying to just get more exposure to the L1 than trying to trade all the different assets on it. And so this is similar, and I think even more so the case where, back then those were tokens you can kind of rationalize because they had, they were DeFi, so they had some type of cash flow or some kind of proxy on other chains. Whereas with these agents, like you said, it's hard to identify which is going to catch on and why. And I think, you've had some that appeared to be darlings and then have fallen off, kind of like, Bully and some others. And so it becomes a lot harder to build conviction in those, whereas you can basically play the long tail through the L1 and then those rather through the platform, and then they meme into an L1.
I mean, if you look at some of these trending GitHub repos, it's kind of crazy. Like the Eliza framework is still like top of the charts. It's totally blown past, like comparing it to stuff like Tau, like a bunch of things. It's just wild to see these, and this looks like the area everyone's trying to like look into now is like the frameworks and like how the frameworks can monetize, right? If you create this easy way to, and also like the developers of the frameworks themselves. You've seen some other protocols come out that allow you to like launch agents under all these different frameworks, and they haven't actually done as well the token wise versus the actual like creators of the framework. And so I know there's like Eliza, you have Zero Bros has his, you have this, I think this, it's like called Arc or
Arc.
something. I'm not totally up to speed
Yeah.
on it, but yeah, all these frameworks.
And there's more popping up.
Jason, give us the bear case.
I think I actually kind of agree with a lot of what Cedric just said. So when Goat came out, this was more of a discussion initially when Goat came out, right? Everybody's like, oh, this is like AI, fuck, agent, sentient meme, cool thing, whatever, blah, blah, blah. And I was like, no, it's literally just a meme, right? At the time, there was no virtuals, or if there was, like, nobody knew about it. Nobody was talking about it. Token wasn't doing anything, blah, blah, blah. So like my thesis around like, okay, so like this is actually, I completely agree with what Jan and Cetera said about the platforms, right? Like Duncan's like pick and shovels type of investing thing strategy here, I think works extremely well. I think it makes total sense to buy the platforms because they will generally do well, and it's not clear which agents will do well. I think the agents that end up doing really well probably don't exist yet because based on what I see, the current crop of agents just are mostly memes, and that was like the way I looked at it, right? Like the early agent meta to me represented kind of like a more like mid curve meme exposure type play, simply because like, okay, it's like in this new narrative bucket, which is good, like a very hot narrative AI. Yeah, ton of exposure, ton of money's going to come in. It gets maybe people who aren't in crypto to be more interested in crypto because you now have like agents and tokens and things like that. You saw like people like Mark Andreessen, start talking about these things more publicly. You have all that, great. But it's still like to me, like it was always, to me it was like, okay, the people like the main buyers of things like Goat were people who probably in crypto who didn't really want to or couldn't, or just like couldn't really come to terms with just like buying straight animal coins, memes, stuff like that, right? So like they're like, okay, this is dumb, dogs will probably go up, but like I'm not putting my PA into this, screw that. And now you have Goat come out, which is like still a meme. It's not an agent, it's a meme. And I'll die on this hill. But it was connected to like an overall strong narrative that was in its early infancy. So it's like all these people who didn't want to buy straight up memes, zoo coins, martyr fi coins, whatever you want to call them, right? They're like, oh, I can buy this because this is good exposure to this new narrative. And it did well initially, like really well, right? It went from like a couple mil to almost $1 billion on the initial run up. And a lot of people did extremely well. But then as soon as like you had actual AI things come out, like virtuals or things on like Clanker or whatever, like all these like actual things, I think it just like totally killed the AI meme type meta, because all of those same people were like, oh wait, I don't need AI exposure through a goat meme, which also I don't think has like super mass appeal for like normies, right? Like I've asked, it's a little experiment I've done IRL with a bunch of people who don't know crypto. I like showed them all like the top 20 memes by market cap a couple weeks ago. I was like, pick your 5 favorite. I didn't give them any real context to any of them. Just like pick your 5 favorite. None of them picked goat. All of them picked the animal. So I was like, okay, like
You got to shield them the lore. That's why you got to shield them the lore, man.
they don't care about.
But
the
see,
lore.
that's the beauty with Fartcoin, and like I'm actually very mad that I missed
I was about to
Fartcoin
get the fart coin, like
because it's the perfect AI, but
Yeah.
then appeals to everybody.
Yeah.
Right curve,
Like,
left curve.
Most people don't realize that it actually has a bit of an interesting story behind it, and it's not just like someone made Fartcoin. And so, but that's how you kind of get the best of both worlds. And also, it's funny because Truth Terminal owns like 20x the amount of Fartcoin as Goat in dollar terms. And so, like the Goat devs were kind of greedy and not giving Truth Terminal a lot, whereas the Fartcoin devs were very generous. And that's also like kind of I mean, it's significantly flip goat now. It's like 30%. I don't know. I'm looking at it now. It's like 87 versus 65. Like that's a pretty big gap, right?
Yeah.
So
Yeah,
yeah, I know. I agree with your point though that like the AI memes now are the agents,
that's
right?
exactly it, right? The agents are the memes. When there's an agent that actually does something sick, like really cool, I will be the first person to buy it. Like if there's an agent that goes around and like hacks protocols as like a white hat or something like that, like yeah, hell yeah, I would buy that. Or
There
like an
actually
agent.
was one that did that. It
Yeah.
found a bug in virtuals, but they only gave the agent like 10K
Well,
or
the problem
something.
is like that.
Yeah,
It's when you start adding fundamental value to something like that and realize like white hat pays nothing. That realistically this thing doesn't really make sense. The thing on the
I mean,
platforms though is it's
I would even do it. I would aim more into a black hat agent, but like as long as it like does something really sick, like
or
it
just
just needs to do
redistributes. It's like a
something that's not
Robinhood
like a
agent. It just robs protocols and returns to token holders.
like as long as it does something that's just not like a chat like GPT Twitter type just like reply guy or tweets like that's like that
Have you
was
seen
cool for like a week.
Queen? That thing is, I mean, is yeah, it basically creates content. It's like it's Do Queen. It's like a female reincarnation of Do Kwon, but the lore and the videos are like Hollywood AAA quality, and it kind of it involves all of CT characters. It like shows its origin story and how all of this was happening for a reason, all for the greater good to like create Do Queen and how a feminine form of Do Kwon is actually
No, I'll
superior.
have to actually go
And
watch these videos.
He goes like, yeah, choosing the vessel, right? It's like you want an
yeah,
e-girl for max appeal.
there's one of them where he goes through basically new vessels. So
He tries
well, so
SPF,
he starts with
tries
Vitalik,
CZ.
then he's
Yeah,
like, no, SPF doesn't
yeah.
work. That it's CZ. He kills Adam Cochran. There's yeah, it's a bunch of good
Vitalik's
stuff.
too nerdy, right?
Uh,
SPF's too greedy, and like,
CZ's too much of a dictator.
yeah, too much of an efficient dictator. It's so good.
But yeah, I mean, like, because at the end, it's all kind of you're betting the same way you're betting on mindshare for regular memes. This is a bet on mindshare for this, and so it's like you either lean into some form of fundamental value or you lean into purely attention based memes, and so I think that'll do well. But like on the platform side, it's interesting where you see, like you mentioned, like the AI16Z stuff, the framework that GitHub is blowing up, but the token's underperforming virtuals. I think, there's other elements that kind of come into play. One being the role of the token and the fact that it kind of exists as this crosspair. I think that's a huge sort like driver of reflexivity on the platform and kind of keeps everyone needing to hold some of the underlying asset to participate. And then I think kind of the distribution and the ease of use of the platform. Because I certainly think there's a world where like the platforms can hit some insane valuations as comparable alt L1 plays once these agents become more useful. Because there's also like network effects to the agents themselves as they interact with each other. And so you do have kind of, like Metcalfe's law type effects on these in the same way you have them on L1s. And so, I think there's going to be like a pretty large consistent bid for these platforms as long as there are new agents being spun up and existing ones continue to improve.
There's also the potential like airdrop, little extra bonus yield on top of this whole thing too. Like I got one the other day, and it was like I don't know, it was like over $1,000. It's like kind of nice,
On
and
virtuals.
you can just see, yeah. And I don't know if it's because I
Yeah.
own like virtuals or game, but you can definitely see that little like. There's also just that small bonus. I would never buy something for like an airdrop narrative. Like when everybody was buying Tia for like expecting airdrops last year, I was like, no way. But if it's like a nice little add-on thing that like is a part of the whole cohesive um, thesis, it's just kind of like a nice little bonus.
What are you most excited about for these agents or these platforms? Like what's the next big development here that you want to see with them that you're like excited about?
value accrual.
Yeah.
I think on virtual side they'll start turning that on. Like I think game is my biggest bag on in that ecosystem, and it's kind of like a beta to virtuals where you get to play the same long tail, but at a much lower market cap with good liquidity. So I think value cap will be a big one.
Yeah. What do I want to see? Well, we're kind of in like the KOL agent era, which was kind of interesting for a while. It's gotten kind of annoying to be completely honest, having these AI agents reply guying me. Um, and people, I own AI XBT. I see a lot of people really like it. It's not perfect. Like there's a lot of kind of like garbage that it tweets out and stuff. It's like a decent news summary kind of. It's like we do Delphi reads. It's maybe a different version of that where you can get caught up on things that are happening. I don't think it has any real like predictive power. If you look at some of the stuff it tweets, it's like 15 minutes after some threader just did like some big thread on it, right? And it's kind of regurgitating it. So, yeah, I mean, seeing agents handle, I would never expect an agent to like actually outperform on the investing side, but seeing an agent handle tasks for people, right? If you had your own personal agent, you can just DM it and be like, "Hey, I need to send like stables here, or do this for me, that for me," and they're
I think agents
doing.
will outperform on the investment side too. Honestly, definitely depending who you think they're going to outperform, but like definitely the average person they could outperform. I have a few. We have a team that we invested in that are building like copy trading bots now. I don't think I can really mention the name, but and they've spun up some like copy trading strategies where they're just looking at wallets on Sol and Base that were early to things, and then basically like doing a bunch of stuff to avoid getting rugged, and like building a bunch of things on top. And I think something like that as an agent, which is actually what they're thinking of, how they're thinking of releasing this, is going to like significantly outperform. Even on the venture side, like as we've built this Delphi AI bot with Tom, kind of made me realize how good. I don't think it'll make decisions by itself, and this is kind of my thesis for AI generally. I think humans will always be the ultimate like tastemakers that make decisions, but they can do a lot of stuff. Like they can ask like questions to the founders, come up with really good investment committee documents, and I think eventually, as you start like training them on your own decisions, I think they could make like their own decisions and do pretty damn well. I think venture is harder than the liquid market stuff, but I think on the liquid side they could definitely do really well. Honestly,
I think in very narrow focuses, right? Like on the early listing stuff, the tricky part there is you get alpha decay pretty quickly. It doesn't scale to a lot of liquidity, just by nature of like what the size of the market you're deploying into is. Where I think those can scale, because like the idea is, you have these agents that you build that can effectively, in one way or another, be a vault. So you deposit to an agent, it trades for you. The agent takes some fee, and the creator of the agent monetizes it that way. So if you're the creator of an agent that does really early stage stuff, then your alpha is best captured by you doing it yourself, because you realistically can't support a lot of capital doing that strategy. If there's like some agents on really large scale assets, that I think can be more scalable, but then you're just kind of competing with algo trading firms and a bunch of other stuff. But yeah, it's I think the tricky part is you're still going to have human intervention, like you mentioned, for a while. So these like completely individual agents that execute completely on their own is tricky, because it's just like hallucinations and stuff like that.
yeah. I don't know. I think the bar is like lower than you think, and I agree. There's like hallucinations and stuff, but like Almanac has shown some pretty sick results with some of their agents, and then I think like people are gonna like there's gonna be a lot of money in figuring this out. I just the issue is like you said, once you have fundamentals, the valuations stop making sense pretty quickly. And so it's like if your bot's doing really well, why would you like do a token for it and rather than just keep the gains? because the token probably isn't going to trade at a massive premium to cash flows. Yeah.
That's what I've always thought with like trading type AI or agents or whatever. Like if you're like I mean, like you have to think, right? Like all of the well-resourced trading shops that already employ like, type of algorithmic trading strategies, like they've got to be pretty far ahead of of most people when it comes to these types of things at this point. And why would they like? If I've always thought like if you have like a trading strategy that's profitable, why would you
Yeah, I don't think they're sending a
yeah,
couple $1,000,000 to Truth Terminal to start aping coins or
like why would you ever open that up to anybody other than yourself? Like it just doesn't make any
If you're
sense.
capital constrained, right? But
You're
like
capital
it's
constrained,
this
yeah.
this Venn
But if it's
diagram
good,
that
you won't
doesn't
be
exist
capital
though.
constrained for very long.
Well, it depends on like what kind of edge you're getting, right? If you're some kind of like delta neutral market making agent, then that's one thing. But then you're competing against, like you said, people who are much more well resourced, and so this is you're like the Venn diagram. To basically, the overlap doesn't exist where it makes sense because if it can deploy capital at scale, then you're competing with much better quality things. And if it's early stage stuff, then it can't support a lot of capital. And in that world, you just take it
Keep
yourself.
it. Yeah,
Yeah, that is always the issue of this stuff. That's always like the bear case. Like who is that Venn diagram seems like almost a null set, right? There's just
yeah.
like not many people.
But I don't know. We'll see. I'm like overall excited for agents in general, just to see where people take it. I had this tweet a while ago. It's like no one gave a shit until they had tokens. I still think tokens are the most powerful tool we have in like capitalism to kind of get things moving. And so, yeah, a lot of money will be made here. A lot of money will be lost here.
I do think it'd be cool when they start talking to each other, and I think some cool stuff will really come from that. I don't know what will, but I think
I
it
don't know.
will.
It's new. It's on the frontier. That's the great thing about crypto is that we get to kind of financialize every new cool thing that comes along. And so you always get to be at the forefront of that. Some people call that late stage capitalism. I call it the best industry in the world. But yeah. Anyways, I think we should wrap it. I got to film another podcast in like 5 minutes.
Okay, I wanted to do one quick question. Actually, I did
Yeah.
this post about ICOs, how people should sign up for Legion and Echo because there's like some insane opportunities on there. And people were upset. They were like, I don't think that's good advice. People like if you're low net worth or like less than a million, you should try and focus on staying liquid rather than investing in early stage stuff. Most of that stuff never launches and things. Curious, going around the horn, what do you guys
So
think of
my
that?
first reaction is I agree with the critics. I would rather be liquid than doing angel investment and stuff if you have a small portfolio. However, it also depends. Are these like I don't I haven't signed up on Legion or Echo, sorry. Um, but like is it this thing where you do this deal on Legion or Echo and then you have the same vesting terms as the VCs, or is it one of these, I know that uh there's been these like launch pads before where you get retail to come in and they get a very low valuation. It's capped at like $1,000, but they also are liquid from day one. And it's like not like everything's
Yeah,
guaranteed, but it's like mostly guaranteed that they're going to make money on that. If it's
it's
that kind of structure, then sure, 100% you should kind of be grinding that and doing like all of those if you're getting it at like a known valuation that's so much lower than it's going to launch in like the next month, right?
that is what it, well, so there's both. You're not liquid like on Echo. There's been some really good deals, but you're not liquid, I believe. But you've had deals like I think Mega ETH was at 200 mil, which is obviously like much lower than what it would raise in the market. I think they did Athena at 300. Again, I'm not 100% sure on these numbers, but it's my impression. I think they did Athena at 300. There's a bunch of like really good deals where you could get exposure to stuff that's clearly yeah, and that's the thing. From my perspective, I don't want to say free money because I feel like I'll it's not the right thing to be telling people. But there's some really good early stage deals on these platforms where you can grind out for like very high expected value stuff. And I do think early stage, I agree staying liquid and stuff, but I do think people also screw themselves a lot with staying liquid because they end up giving back most of their gains if they aren't good traders. early stage investment kind of forces you into a bit of discipline because of the lockups. And if you're like smart but not particularly disciplined or a good trader, it ends up being pretty good for you. And it's also just like how I don't know. I would probably say the majority of people that have really made it in crypto, maybe that's not fair. Maybe 50-50 have made it through early stage investing. It's definitely how we made it. So I'm probably biased towards that. But I do think and it's also a really good skill to learn, like being able to assess teams and stuff like this. So I don't know.
I think the broad answer is yes, it's a good idea, and then the more granular one is it depends, but in most cases, yes. Basically, so areas where it's like an obvious yes is if you're in the 500 to a mil range, right? Then it makes sense to deploy. Then like the share of your portfolio you're putting into illiquids is not overwhelming, so it makes sense. If you're in the 0 to 100 range or like 0 to 250, it's less of a definitive yes, but then it kind of depends on how deep you follow the space, right? I think the deeper you are in the space, the chances are the better off you'll be on the liquid side, just because you'll catch narratives early, right? If you're pretty passive, then I think this is a much easier pitch because you can actually get great access without having to put in the time that someone who would need to do this full time. So I think if you're not full time in the space, then it basically makes sense at almost every PA size. I think if you're 0 to 100, then you know then it might make a little less sense, and you should stay more liquid. Either way, you're not committing to anything, right? So at any PA size, it makes sense to sign up and see what you like, and then I think like the size of your PA is just like the amount you
Even at sub
deploy.
100, you could put like a
Right.
grand.
Yeah. No, I agree. I think it's just like it basically the obviousness of the decision isn't as obvious or goes down as you get to a lower PA because in a raging bull, like it's just good to be in the market liquid. But yeah,
Yeah, I
I think
mean,
it definitely makes sense.
I agree with Jan's take. I think it just depends. Like it's like a not great answer that nobody wants to hear, but like as with any kind of like financial type of like investing and like PA allocation type of stuff, like it just depends on like your personal situation, your sophistication level, your risk tolerance, like all of these things. Like personally, I've never really had access to a lot of these early stage deals, so like almost all of my money has come from like liquid stuff, but like most people don't make money in markets in general, right? Like if you're active, like fairly active, like most people end up losing money. They might make like unrealized gains in a bull market, but like end up round tripping most, if not all of it, in the bear market because they're not great at determining like when the key inflection moments are in the market. So they end up staying too long and they keep employing the same strategy that made them a bunch of money when the market was going up in easy mode and then losing it all when the market stops doing that, right? So like liquid trading and liquid investing is like not easy, like it's definitely tough. I think it's just a completely different skill set as well. Like to Jan's point, like you're not committing to anything like sign. I mean, if you're in the U.S., I don't think like, and if you're not like an accredited investor, which like this like discussion doesn't really apply to, right? Because I think like the initial thing was like if you're sub a mil, you're not accredited. So if you're in the U.S., you can't really do it anyway. But like just signing up and checking out these types of deals and seeing what exists, I don't think can hurt. Like it can only just kind of expand your type of knowledge base on these types of things. So like, if you do see something you like and you are able to do it based on the jurisdiction you're in or whatever laws apply to you, like I think it makes sense. Like, I mean, it's something that I wish I spent more time with, and I probably will spend a little more time with going forward. But like I'm like kind of like you. I'm kind of like biased in the other direction. Like I've made most of my like crypto money just with liquid stuff because I think like if you're in crypto, right, and you spend like most of your time looking at crypto markets and you don't leave during the bear market, like you will do really well when the bull market comes just by virtue of being here. So it's like it's like really, and again, like as being like a super liquid type of person, like I haven't traded, like this has been the least active I've been in markets since I've joined crypto in like late 2016. And I've done way better than I've ever done. So like I think that's a testament to like the point, like most people just like don't do well by being super active. And if you just like identify sectors or themes or narratives early and you just buy and hold, like there's no way your active trading is going to beat that. So it's kind of like a similar type of thing here, right? Like, yeah,
Mhm.
I think it just like depends. Like I don't think you can go wrong
I think
doing
having a mix is like nice because they're kind of different things,
different
different types of
buckets.
exposure. I'm the same. Like I've never made, or maybe I just made my first dollar off of a private investment ever in this space. So everything's always been liquid for me too. So I guess I'm kind of biased that way. It's like nice to have the flexibility. Um, but yeah, I think, yeah, it's definitely worth it to sign up and like check some things if you think they're
I
kind
mean,
of
you're
like
going to get deals
interesting.
that funds don't get, right? So there's I think immense alpha in just sitting there and seeing it.
Yeah, exactly. This community narrative just means that people are doing insane deals for like Echo and Legion right now, to try and get community on board on like similar or even better terms than VCs. And a lot of these deals were better terms than the last VC round, better lockup terms. So
Yeah, it's
yeah,
way better to do this than to airdrop to build a community, like 100%, right? Um,
yeah,
especially if you can say, "Oh, we're giving you a deal like way cheaper than VCs," right?
yeah.
You throwing shade at my hype airdrop, bro?
I mean, that's like I don't know, hype's like an anomaly.
I'm kidding.
Uh,
I'm kidding.
I mean,
Yeah,
people paid for
it's
that
really funny
airdrop.
to
To be
watch
fair,
everyone's.
Yeah,
people did
most
pay for
people
that airdrop.
paid quite a bit. Yeah.
Yeah,
It's funny to watch like the other airdrops not perform nearly as well, and then see market confusion. Why are you confused that billions of unrealized gains that just got dropped on your for a meme coin aren't pumping?
yeah. All right, let's wrap it up because I
yeah.
got to
Let's wrap.
bounce.
Cheers, guys. Thanks for joining us, Jason. This is a great episode,
This
and
is
Yeah.
the
see you
last
all
one, I
again.
think. I think this
Oh,
is the
really?
last one of the year, probably.
Yeah,
Right?
Oh,
definitely.
yeah. I guess that's true. Yeah.
Yeah. Next week is Christmas. So yeah, that makes sense.
Yeah.
All
So
right.
yeah, let's.
Merry Christmas, everyone, or Happy Holidays, whatever the case may be. And yeah, see you again next year for another year of hive minding.
Yeah. See ya.
See you guys.
Thanks, everyone.
Later.